Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, I noticed it's a red board from New York. Everything on the New York Stock Exchange, it seems, is down, with a few exceptions. What's happening there?
Yeah, we're definitely seeing a little bit of selling and fear into the market today. But, the reality is the stock market has had a tremendous run over the past month. We've seen almost a 10% rally in the S&P 500. We've seen the NASDAQ do roughly the same thing. And we haven't had a pullback since then. If we were to look back in time on the charts, we have seen multiple rallies of 4 to 5% to the upside, typically followed by a 2 to 3% market correction. And so we're way, way beyond that. And this market is it's a little overextended to the upside. We just need to have some type of bull market kind of buck. It's kind of what it is. It tries to kick everyone out of the market with a really sharp pullback that could last anywhere from 2 to 5 days. And I think that hopefully is actually kind of what's starting, because the more the market goes straight up like this, the bigger the correction will be later. So we might as well have a little correction now, and then it can keep on going for what I think is going to be a holiday rally. And I'm looking for the S&P 500 potentially to pull back up to 4% from where it is right now before kind of going higher. So we'll just have to see how this plays out, but we're definitely seeing money move out of stocks. It is flowing into several of the different defensive sectors in the stock market, like consumer staples, utilities, and of course money's flowing naturally into bonds and gold as well. So, this flight to safety and comfort today.
Crude continues to go up, and if you're going to talk about seasonality for certain commodities, crude usually this time of year is heading towards its seasonal low, and yet it continues to climb. What's the story there, Chris?
Yeah, crude oil, it's in a really strong uptrend based on the technicals since the COVID low. It's almost hit every technical measured move to the upside, and the next move here is $88 a barrel for crude, and right now we're at 84. I have a feeling we could see this continue to go up and tag that $88 level. We're seeing a really strong push in crude today. It's up 2.75%. And I think we're going to continue to see that. Really we're seeing a lot of stocks in the energy sector continue to push up. We have seen a little bit of a hiccup in oil and oil stocks in the last week, but other than that, it's just a little correction in the blip of them going higher. And in fact, we saw the most leveraged kind of oil plays, gas and oil exploration companies, they actually hit some new highs there yesterday. So they're leading the way. We want to typically see energy stocks making new highs, and then crude oil typically follows up behind it. And looks like what's happening right here. So I like oil. I think it's still going higher. It's got another $3-4 to the upside. After that, I think we're going to be into a much bigger correction that seasonality-wise would probably fit with what's going on here.
We see so many groups and organizations now urging people not to invest in oil and gas. We have some institutional investors saying, universities specifically saying they're not going to invest in oil and gas exploration. Isn't that going to result in shortages? Because we certainly haven't replaced oil and gas yet with alternative energy. $100 barrel, $200 a barrel oil?
Yeah, I find I find it really interesting. I mean, it doesn't seem like that long ago they didn't know where the heck to store all this stuff. They were filling pools and random ships, and I mean, they couldn't get rid of this stuff. And now here it's like ramping up, and we're going to be $100 oil before we know it again. So it is interesting. If obviously people are stopping, they don't want to invest in the sector to keep going and do exploration. I mean, it'll come full swing and potentially drive the price much higher. But I mean, we still have so much oil. I really think because oil went so extreme after COVID there, with the futures going actually negative, it's kind of like the yin and yang. When something goes too far one way, it's going to have to come back, that rubber band effect, in the opposite direction. And I think we're just seeing this huge wave in the opposite direction. I think a lot of people were really betting against oil, and it just keeps going up and up. And it's really just causing this big short squeeze and people to kind of jump on board here. But, yeah, the whole oil, I mean, talk about extremes. I mean, it just doesn't, make sense. You go from negative to, almost $85 a barrel in such a short period of time. Pretty extreme.
Natural gas, what's going on there?
Well, natural gas has been really volatile for the past couple of months. It looks like it might be putting in a top here. It's either a top or a big consolidation before it goes even higher. Today, though, we're seeing natural gas down over 8%. It broke a low that it made about a week and a half ago. So it's now actually making a series of lower highs and lower lows on the daily chart, and it might be starting to roll over. Huge selling volume in natural gas today, and it has broken support. So we're going to keep our eyes peeled for this because I think it could be on the verge of a breakdown. And when it does break down, it's currently at about $5 right now. We could see that collapse all the way back down to $3.50. So a pretty big drop for natural gas if it happens to deflate here, break down all the way. So I'm keeping my eyes on it. I mean, that's definitely going to play into the energy sector stocks. If natural gas does collapse, it's going to pull those stocks down a bit. But really, the big money seems to be in the oil. We can still have natural gas move down and oil move up, and the energy stocks will naturally move up. They're more heavily weighted in oil. So I'm not too concerned about what natural gas is doing, but it's definitely very volatile, and it's either going to $7 and change, or it's going to break down here really quickly and fizzle right down to about $3.50. So it is going to be a pretty wild swing here over the next couple of months.
New COVID medications online with Merck and Pfizer. What's going on the pharmaceutical front?
Yeah, when you look at like the healthcare sector, I mean, it hasn't been performing all that well. It's been moving up, but it's not making new highs. You look at the biotech sector, it has been going down since February. Even though there's news coming out here, they're just not really getting traction in moving higher. I think like the biotech sector, XBI, has a lot of potential when it does reverse direction. But overall, I mean, it seems like it's not the place to be at this point. Individual pharmaceutical companies may be a little different, pretty volatile, but overall, we've definitely seen those kind of the biotech sector really be under pressure pretty much all year, and it still is trending lower at this point.
Precious metals, what's happening with gold and silver?
Yeah, we're starting to see them come to life. I've noticed this in the last month and a half that some days we're starting to see the stock market sell off and move lower, and we tend to see gold and gold stocks move up. That's the case that we're seeing today, again, which is stock market down, gold is up, gold miners are up. This is a really good sign that they're starting to get some leadership. And I think over the next several months, next 6 months or so, I think we could see the precious metals and the gold and silver miners become one of the biggest leading sectors. Now, they've been in a bear market for the past year, and they just turned up last week into a recovery stage. So based on technical analysis, long-term chart patterns, and momentum, they are just potentially starting to move higher. And when something comes out of a a bear market, it has a lot of potential. A new bull market's got a lot of legs, a lot of power behind it, and so they could end up picking up speed here and having a very strong run into early and mid 2022. So I like what's going on with the precious metals. They're still all struggling with resistance right now. They haven't had clear breakouts to the upside, but they are pushing and testing on resistance level, trying to eat through that volume that's at those levels. And they're showing signs of strength. Once they start to break and run, I think we're going to see a big move in this sector, but they just haven't fully broken out yet.
Catalytic converters are still being stolen at a horrific pace, at least in the greater Vancouver area. What's going on with palladium and platinum?
Yeah, when we look at platinum's up today, but it has fizzled out of favor for the last several months as well. All precious metals have pretty much been struggling, but we are seeing them put in a bottom and a base, and platinum is putting in a testing resistance here. It actually has a little bull flag pattern that is pointing to higher prices, but it is right at resistance, just like gold and silver. So it has a little bit of work to do. It hasn't fully broken out yet. When we take a look at palladium, it has really fizzled out of favor, falling from 3,000 all the way down to about 1,900, almost 1,800. It has also had a recent pop in October and pulled back a little bit, which looks like a bull flag pattern. So it's testing resistance as well. Again, all the precious metals have short-term bullish patterns, but they haven't cleared resistance. They need to break through some previous highs from about a month or two ago, depending on the metal. If it can break those highs, I think the whole precious metal sector is going to come to life in a pretty big way. So they all look good, they look promising, but they need to confirm and actually start making higher highs, which means breaking through resistance, and then they're fair game for a new upward trend.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, is uranium still hot?
Yeah, uranium is definitely, those stocks have been absolutely on fire. They've pushed to new highs this week again. Definitely has a lot of money moving into this sector of these stocks. High volume. It's on a run. When you look at it from a long-term perspective, like a weekly or monthly chart, and you zoom way out, it really has put in a multi-year bottom, a massive bottoming pattern, really going all the way back to 2016 roughly. And so it has broken through that level, and now it's in a new raging kind of bull market phase. Based on price action here, is very volatile, very similar to what we saw in natural gas, where it's kind of pushing up to what I call our three surges to a high, which typically means it's a topping pattern. But you do need to let this topping pattern actually top and confirm a new downtrend. You never want to jump in front of something like this, because uranium stocks, like the uranium ETF URA, which covers those stocks, these sectors can pop and run. Bubbles are amazing when you're on the right side, but you do not want to bet against them because you just don't know when they're going to reverse. So they're a very quick momentum type play, but based on the long-term chart, they really just started a bull market, and they could continue to be very strong leaders for the next several months. I think we're seeing miners in general, I think, start to do really well, whether it's uranium, precious metals are firming up, copper miners. There's ETFs for all of these. They're all showing signs of strength and relative strength in general and strong chart patterns. So we're starting to see money really move into this stock market in terms of risk on. We've seen the large cap stocks like the S&P 500, the NASDAQ, moving higher all year. Just about 2.5 weeks ago, we saw the mid cap stocks break out to new highs after a 6-month consolidation. So now the mid cap stocks are they're a little more risky, but people are now willing to go into those. And then last week we saw the small cap stock, the Russell 2000. That index broke out of like a 9-month pattern, a bull flag pattern, and broke to new highs. So now we've got the whole market participating, large cap, mid cap, and small cap. And when the small caps are starting to really take off, that's typically when we see the miners start to do really well. So we're just at the beginning stage here where all these miners, including uranium, could actually have a really strong push going forward.
Have you been keeping an eye on the so-called meme stocks, AMC, GameStop, and so on?
I haven't been keeping my eye on them too much. When you look at like AMC, for example, I mean, it really had that big, huge rally this summer, and it's really just been trading sideways ever since. But it is a very big pattern. The last time we saw this pattern, it broke to the upside, and we saw a massive run. It ran about 600%. Based on where we are right now, I mean, we could see AMC, bust through $100 per share based on this pattern and what it's done in the previous time. GME, when we look at it on a weekly chart, it is building one of those big bases as well that's very explosive. It could potentially pop to like 500 again or 1,000. Again, that is a totally different type of play. That is very explosive, very difficult to trade type of play. But the chart patterns are still really bullish. And if the stock market here, which it looks like it's just started another major run because we have all index size of stocks participating, we could see these meme stocks take off and run. The Russell 2000 has the potential to run about 25% from where it is right now. If it can run 25%, individual stocks can run hundreds of percents. So definitely we're opening up the fair game here. I'm really excited where we're going into the end of January. My cycles are saying, hey, we should see a very strong run to the end of January for stocks. But as we mentioned at the very beginning of this talk, we do need to see this market, take a little wind out of its sails, refresh with a pullback, and then I think we're charged and ready to go higher again.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howestreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.